Hey, what's up, guys? This is Cody the Coin Raptor coming at you with another Bitcoin monthly report. And this report comes as of April 30th, 2024, entitled In the Wake of the Fourth Halving. And Ark Invest is going to talk about the Bitcoin expectations post-halving and how the growth could be absolutely phenomenal if it follows historical trends. We're going to go ahead and get right into it. So the first thing we always start off with is the market summary. And what they like to talk about here is the short-term holder cost basis. So when they talk about short-term holders, they're talking about wallets or addresses that have held coins for less than 155 days. They're talking about that being a very nice support level for Bitcoin, and we'll talk about that more in a little bit here. But they also talk about the previous halving events leading to some serious upward momentum within about a quarter or so. We're going to see that and what their prediction for that's going to be. They also like to talk about the Bitcoin US ETF flows turning negative during the last week of April. So that's something that's going to be featured in its own slide. We're going to talk about that and what exactly that means. And they're also going to be talking about the broader macroeconomic picture and the reason why there's so many issues with the higher for longer interest rates and how that affects the global economy, or at least the economy in the U.S. So we're going to go ahead and get right into that. So the first thing we'd like to talk about is the Bitcoin metrics. And there are a lot of different moving parts to this. But basically, I've highlighted the bearishness of the most recent long-term holder supply numbers that they have here. And the reason for that seems to be the fact that the long-term holder supply has actually been moving lower lately, and that seems to be due to long-term holders taking profits while Bitcoin's near its all-time high. But there are some other upgrades and downgrades that they've done, like, for instance, active owners got upgraded to neutral, and the time-weighted turnover got upgraded to bullish as well. So it's not all negative when it comes to Bitcoin metrics. Next, they go to the cost basis, market cost basis, no change there. The market realized market returns, however, that's actually been upgraded to bullish. And what's really interesting about this is under the market sentiment category, they've double upgraded both the perpetual futures basis and the expirational futures basis to bullish. Okay, so that just basically means that the market sentiment overall has been very bullish for Bitcoin in the last month, or at least in about April. Next, they like to talk about the Bitcoin, where it wound up in April. So you have the short-term holder cost basis, which again I said was the wallets that have held Bitcoin for less than 155 days. We had Bitcoin go all the way down to the short-term holder cost basis at 59,313. Now, this is a level that I also expect is going to be strong support for Bitcoin in the future, maybe at about 59,000, maybe about 60,000 or so. This has been strong support in the past. You can see here this green line outlined against the Bitcoin price. We've seen multiple times that it rarely ever really goes under this short-term holder cost basis, but it does happen. So they're using this as a strong point of support. Now, they also say that the 200-day moving average at about 49,000 is going to be strong support, and then the on-chain mean at about 42,000 is going to be strong support as well. The next thing they're going to talk about is the Bitcoin supply as of the halving. Now, the Bitcoin supply has actually gone to about a 1.8% inflation. Now, that is absolutely phenomenal. So Bitcoin throughout all the years has been declining. The inflation rate has been going down rather than fiat currency, which has been climbing the opposite way. Bitcoin's inflation has been falling rapidly. And this is by design. Every single time we get a halving event, it decreases the Bitcoin inflation significantly because there's less Bitcoin that is coming into the market. So they also say that as the months close, they have 93.7% of all Bitcoin has been mined. Again, this is very bullish because you have now a potential for scarcity in the Bitcoin market if there's not enough Bitcoin to meet demand, and that would lead to a higher price. Next, we have the halving rallies. Okay, so the halving rallies, which is something that Bitcoin has done many, many times before, it's part of the Bitcoin cycle. Each halving is a precursor to upward momentum on a long-term time horizon. Now, specifically, what they say is about a quarter or so. But they also highlight after 1 year. So just ways of representing the Bitcoin price. They're all much higher after the halving of Bitcoin. So they actually say here that after 1 year, Bitcoin has achieved a performance multiple between 3 times and 70 times. However, they do say that a 3 times Bitcoin price increase a year is possibly too optimistic. Now, that being said, I think that they're probably right in this category, and we should expect probably anywhere between 1.5 times and 2 times. I think that's reasonable, but we've seen that every single time after the Bitcoin halving happens, we tend to have diminishing returns to the large price increases after the halving, so they tend to get smaller. The post-halving rallies tend to get smaller. All right, so next, they also talk about the performance multiples and compared them to the previous 3 halvings. Now, they say here that it's happened, they've seen between 0.8 times and 2.5 times performance, and that usually happens, I'd say, about 60 days or so after the halving. So that's pretty strong bullish momentum and bullish price action about 60 days after the halving. And so if the current trend holds, that could give us a serious uplift in the Bitcoin price. We could potentially see a Bitcoin price above 100K, possibly 120K, 140K. That's essentially what they are predicting here. Next, they talk about the Bitcoin spot ETFs. All right, so the spot ETFs, something I've talked about quite a bit. They actually go and they graph all the spot ETFs here. They have grayscales outflows, which are enormous, and then they have the total flows basically minus grayscale here in green. So looking at the total cumulative flows, they said that at the end of April, they actually had a net outflows, which totaled $1.3 billion on May 1st. So $1.3 billion were taken out of these spot ETFs, all right? So they've also said that net flows since the inception of these Bitcoin spot ETFs have totaled $10.4 billion. That is money that would have never gone to Bitcoin if these spot ETFs had not been approved, okay? So keep that in mind, $10.4 billion because of Bitcoin spot ETFs. Next, they like to talk about the Bitcoin SOPR, or the spent output profit, the spent output ratio. And this is the way of telling basically whether or not the sellers are selling either at break even, or they're selling at a profit, or they're selling at a loss. They say here that Bitcoin SOPR returned to 1 on May 1st, and that signifies that the sellers are selling at break even. Now, when you compare that to previous historical bull markets, normally that means a local bottom in bull markets. So essentially what they're saying here is that corresponding to the SOPR, that we are close to or at a local bull market bottom. Next, they like to move on to the macro. Okay, so the macro, specifically talking about the Fed and interest rates. They start here with the yen weakening to the US dollar. They say the Japanese yen has depreciated 19% against the dollar. All right, and it basically punishes households that rely on the yen to purchase everyday goods imported from other countries. All right, so this is just a sign of global weakness. Now, another sign of potential weakness here is, again, high interest rates. They compare the U.S. 2-year yield to the First Republic Bank market cap, and you can see here that as the 2-year yield climbed, the First Republic Bank market cap fell dramatically, and then they were acquired by Fulton Bank. So what they're saying here is that higher for longer interest rates could mean further regional bank collapses, and that would be bad for the economy. Now, they also talk about small business optimism, and the small business optimism levels have hit its lowest level since December of 2012. So, the whole idea here is that small businesses are not feeling very confident in the current economy. They are the primary drivers of job creation. So, as a result, the economy will suffer and labor markets will also weaken. That's essentially what they're saying here. Now, they also talk about the broader labor market, and the way they use to look at this is by the JOLTS quit rate. Now, the quit rate captures voluntary separations initiated by employees rather than by employers, so people quitting their jobs. And they correlate this with a loosening labor market. All right, so as more people quit, that loosens the labor market. And so this is, in their view, very neutral, but this kind of has an association with a weakening jobs market. That's basically what they're saying right here. All right, so ARK's report for this month, I think, is very bullish for Bitcoin, but it is still very bearish on the global economy, the macroeconomy, especially the economy in the U.S., and the fact that many of these conditions are deteriorating with local regional banks, and not to mention that, but also the labor market potentially getting weaker and weaker and weaker. However, that being said, the bull thesis around Bitcoin is still very strong. And what we've seen post-halving is an incredibly strong Bitcoin rally. If Bitcoin follows the current cycle, Bitcoin could potentially wind up being up to 2 times higher in a year. That's my primary takeaway from this ARK Invest Bitcoin monthly report. Thanks for joining me, and as always, please leave a comment below if you guys enjoyed this video. Follow me on Threads and also on X as well if you want to see the most up-to-date information and my latest chart TA. Thank you very much.